Good morning, good morning, good morning. Today, Tuesday, August 18th, 2026. So, jumping right in, we have our 8 a.m. highs and our 8 a.m. lows marked out. We're getting a sweep of those lows now. Looking at possible tap into that 15-minute FEG here. And my OCD, gotta bring that over. Got a 15-minute PD right here. So even though we swept those lows, we're getting some rejection there. I like to see a tap and a rejection into that 15-minute fair value gap. Then we start to look for some lower time frame inversions there. So we'll go on down to the 1 minute and start to look for some type of inversion. We still got about 3 minutes left until the open, so I won't be taking any trades before that open. So a new, no, we didn't. It's not quite a low, but this is the low. I say that because I like to see a break of this before this is considered a low. See that immediate rejection there. Kind of trying to trap in some of those early buyers. So we'll wait for the open to see what type of volume it brings at the open. So there's a low there. So let's see if we get a break of this. We get a break of this low, or maybe an inversion of this 1 minute. Tending to respect this 1 minute. This is a 1 minute bearish that was created during the sweep down. We'll just leave it there for visual sakes, but I'm still going to wait for the open to see where our first presented fair value gap will be. But if we get a break and a retest and then an up, we could be seeing some higher prices. But I definitely like to see some sort of tap into this 15 minute here. Yeah, 15 minute candle's got a nice bottom wick there. So we'll see. We got about 30 seconds left to the open. We have our close, our yesterday's close is way up here. So that's a big new day opening gap. We have a lot of higher objectives here. New York midnight open, London high, 8 a.m. high, of course. So let's see as we get into our open where the market leads us. So at the open, we seen a nice break to the downside. We wicked down, hit that 15 minute fair value gap. It's creating a nice bottom wick there and rejection. So let's see. So we're getting some volume to the upside here already. I'd like to see a close here above. We got a close on that 1 minute. So if we get some sort of rejection, I'd like to see So we're tapping into this 15-minute. We have a 15-minute FEG there. And it's kind of just leaving without us. So I need some type of pullback before we hit those 8 a.m. highs. So we got a break there. We got our first presented fair value gap here. So let's see if we can't get some type of and that looks like we're probably gonna get a nice pullback into there. Didn't pull back into rejections. I'm gonna wait till the close of this candle. It kind of tapped this in here on trading view, but let's see. It went up and came right back down. We got our first presented fair value gap here. And it's just shooting straight down. Look at that upper wick there. So I put down here, I put a put wall here. So if it didn't tag us in, I'm gonna cancel that. So I don't know what happened there, but I think trading view is good. But I didn't take any trades on my evals or funded accounts. This was just for visual. But we are getting so we may be seeing some sort of continuation move to the downside. So it did tag us in there on that move on the trading view. Trading view's just been acting up. I'm going to cancel that there. That shouldn't be there. So NQ is a lot weaker than ES at the moment. So we're getting a retracement back up. This is our first presented fair value gap here. We also have a fair value gap that was created here to the downside. So I'm not even going to mark that there. We also have a 15-minute bullish fair value gap. So what I'm going to do here is I'm just going to put our line there. This is the beginning of our 1 minute FEG that was created there. So let's see if we get a pushback above there. I want to see a pushback above our first presented fair value gap before I jump into any longs. So we're getting wicks above our first presented fair value gap. I want to see us hit these 8 a.m. highs. Let's get a break above these New York highs first, these session highs. So we got a break below those ADM lows. We tapped into a high time frame PD array, which satisfies our criteria for some longs. For potential longs, we did create our first presented fair value gap. We do have a 1 minute fair value gap here. I like to see a body closure above this line here, and then super validate our longs here. So I'm looking for a 1 minute body closure above. We got wicks, but no body closures above that line there. So let's see if we can get a body closure above that line. Other than that, we may be seeing some continuation to the downside, down into this sell side liquidity and into this put wall down here. And I put the put wall down here because I've been researching gamma and gex, simply because the dealers, the movers, the shakers, the money, the market makers, they are essentially using options to and futures and other assets to balance out their books. And when these guys are in the market, they're the ones that move the market. This is kind of, I want to see what type of environment we're in. So if we're in a negative gamma, it seems that we would be looking for more expansion moves to the upside, more expansive moves, more amplified moves. If we're in a positive gamma, we'd be looking at more stabilized. And don't get me wrong, I'm still researching, but in a positive, you're kind of looking for dampened moves, not so amplified, not so expansive. So you don't want to chase a breakout in a positive gamma situation. So be as it may, we're below gamma 0 here, so we'd be looking at more of not so much of a how do I say, it's more unstable, more or less you would see those continuation moves instead of those. You see the momentum moves, you see more momentum to the downside. So we got this momentum to the downside overall, which we've been seeing. So shorts wouldn't totally be out of the question, but in this first hour of trading, I like to see our ADM highs, ADM low model take into effect, because usually, so we broke these ADM lows and we're going to continue into a short continuation momentum type trade. We want to see a break of these highs, maybe a tap and a rejection into a higher time frame PD array, and then maybe the continuation momentum to the downside for the rest of the day. But in the short terms, in the short respects, I'm looking for our ADM highs and our ADM lows to get tapped and stay within our model. So I did get into that long trade on my TraderVate account. I didn't really, I'm focusing, so I really didn't have enough time to pull it up and show you guys, but we got it in there, kind of took it there. pulled it out for 295 so far on the day for that long. Just calling out what I've said. We broke those lows, validated our shorts, inversed this first presented fair value gap. We're experiencing a pullback. We broke these highs. So it looks like we may continue on up to our 8 a.m. highs. This is our gamma 0 area, because as I was saying, we're looking into the gamma and the gex. It kind of tells us what type of environment we're in. Right now we're below gamma 0. So being below that gamma 0, we're kind of in a negative environment. So I'm just going to pull it up from my research, because we're on this journey together. So I don't want to act like I know I'm fully versed in the gamma and the whole gex thing. So above gamma 0, generally more supportive, stabilizing position. So right now we're below gamma 0. Below gamma 0, the environment can become more momentum driven, unstable. So by us being below gamma 0, we could be looking at more of a momentum type situation. That's why it's so unstable. As we see at the open, we see price go up. We kind of swept those 8 a.m. lows pre-market. It went up, created this high, came back down, swept these lows here, got this liquidity area here, and then didn't tap into our area of liquidity. This is a higher time frame order block, and it continued to go up. We broke these highs. Now we're pulling back, tap our first presented fair value gap. This is the top of that 1 minute bearish fair value gap that we created, and see if we push back up. But you can see it's not smooth. It's not a breakout type situation. It's kind of, generally more momentum driven. So we'll see where the momentum is carrying us now. We got a rejection off that first presented fair value gap, and we'll see if it goes up. So generally, I'm just reading from here when it's speaking of gex. If NQ crosses below gamma 0 and continues expanding downward, that is confirmation that the move isn't merely a quick liquidity sweep. So shorts may be in effect here, because let's go to the higher time frame here. So let's go to the 1 hour. So on the 1 hour, this is gamma 0, my gamma flip here. We broke first of all, we broke prior day lows here. We broke our prior day lows, came down with an expansion move, broke gamma 0. So this wasn't just a liquidity sweep. This is a momentum move to the downside in the overall big picture. There's multiple 1 hour fair value gaps that were created on the way down. So we're creating these 1 hour fair value gaps on the way down here, and we're momentum driven down, just as it says. So below gamma, the environment can become more momentum driven, unstable. So you see the unstable part. See these upper wicks here? Not so many upper wicks. We're getting down. We broke below gamma. You see here, we're not getting those upper wicks here. We have some lower wicks because we're still above that gamma flip. But as soon as we break below that gamma flip, it's still momentum driven, but now it becomes unstable. You see these upper wicks formed here. Then you see these lower wicks form here. That's instability. That's indecision. So there's some weight there, but it's still carrying on that momentum, and we're getting back down into those lows that we just swept. But we can see by this doji candle the instability. That's why I got into that long after it met my criteria of the 8 a.m. sweep of the low and getting into some longs. It met my criteria when we swept these lows, tapped into my higher time frame PD array, the 15-minute fair value gap, created this low with rejection and expansion. We created this 1 minute here, which I marked it out in this blue line. This 1 minute bearish fair value gap. This is the top of that 1 minute. And we got up and we closed above. I got into my long, rode it on up for a small scalp into the longs. But the instability, being as though it didn't cross that gamma zero, we could see that it could possibly head on down, back down, being indecisive, kind of going what we've seen. So that's what led me into looking into the GEX. I believe everything happens for a reason. So I'm a big stickler on education. You never stop learning. So on this journey, I'll constantly bring new things to the table, and I'll share it with you guys. So the GEX is something that I learned from our Robbins Cup winner, 26 years old. I can't quite remember the name, but I came across that interview yesterday, and that was his motto. He had 100% return and won in 1 month of trading 100%. That's 26 years old, and his motto was simply location. It was location, environment first. Environment being the GEX. What type of environment? Is it a negative gamma or positive gamma? Knowing what he's walking into. Then location, where you at as far as are you in discount or are you in premium? And then confirmation. So then it'll go in and see pertaining to order flow, are sells being absorbed or buys being absorbed? Where's these orders coming from? Who's making these orders? So, and he'd use order flow for the entry. So it's similar to what I do here. Pretty much the location. Basically, I want to know if we're in premium or discount. If we're in premium, of course, I'm looking for shorts. If we're in discount, I'm looking for longs. Confirmation, which is my ICT model with the fair value gaps, liquidity sweeps. I'm looking for a sweep of liquidity, some sort of indication from a PD array, whether it be a rejection or an inversion, before I enter into a trade. Now, in addition, the environment we're in could only add to that model, knowing are we in a negative gamma or a positive gamma. Right now we're in a negative gamma, which shows us that we're walking into a market full of instability and momentum. So being as it may technically look like we should be getting into some longs, but overall, if we look at the big picture, the momentum is to the downside on this hourly chart, and it has been for some time. Since yesterday, we've been in a downward momentum, in a bearish momentum. However, when we crossed that gamma zero, started to see a lot of instability, and you could tell by the wicks. See, as we get up here, there's not a lot of upper wicks. There's some small, not a lot of big upper wicks. It's strictly momentum or trend driven. As it says, above gamma zero, generally more supportive, stabilizing. So it's more supportive and stabilizing. So this looks pretty stable, these long bearish candles. Once we get below, once price broke below gamma here, this is gamma here. Let me get rid of this here. This was let's clear it up here. So these are 8 AM highs, 8 AM. Price broke below gamma here. Then we started to see these bigger wicks here. We see price breaking below, then it wants to go back up. We come back down, then it wants to come back up. Down, up, rejection. Down, up, big move up, rejection, down. Down, big move up, now we're going down. That's indecision. That's one. These are hourly candles. 1, 2, 3, 4, 5 hours. All below gamma. Above gamma, 1, 2, 3, 4, 5. You don't see those big wicks. You see those big wicks here. So now we're in an unstable environment. So we want to look at focus more on what's causing the market to do what it does. So now I know what type of environment I am. I'm in. I'm looking at the location that I'm in. We're approaching a where this momentum could start to die out. We're in the bottom leg of this downward position here. So if we go over to the 4 hour, I'm looking at where we are. So we'll go here. We'll go here to this. Here, boom, boom, and let's see. So we're in this downward leg of we're in discount here. We're in discount of this 4 hour leg. We're in discount. So as we get into discount, we can see the energy start to die down a little bit here. We're in discount. It's starting to die down. It's starting to die down here. We're approaching an area of liquidity. So let's see. I marked out here. So this is a 15-minute order block. I have a 15-minute order block here. So actually, I'll just mark it out here. So I have a 15-minute order block here, and that's where my thing. And we have a low here, an area of liquidity here. So tentatively, I'm gonna mark the wick of that order block there, the top wick of that order block there, and we'll dash it out. We'll put some dash marks there, and just my OCD. We'll bring it there. Boom. So we're in discount. We have an area of liquidity here. This is the top mark. Let me mark that out better. This is the very top mark of. So this is the tip of that 15-minute order block, and this is the put wall in my GEX markings here. So we have a put wall and a call wall. So as it approaches the put wall, you could expect a bounce. And you could expect a bounce from here up there. That's what the put wall indicates. And in options, you have puts and you have calls. So when generally puts is you're expecting price to go lower. So you put your put in, and you could have it in for a specific amount of time, and as price gets closer to that prediction that you put in for a put, your profits increase. So if we're at 29,600 and you're putting puts in for 29,500 in a week, you say, okay, in a week the NASDAQ is going to get to 29,500. And in between that, as price gets closer to that, your profits increase, and you can cut that trade at any time. And that's the option. So people will put a lot of puts are put in at 29,500, a whole bunch. Institutional, they're putting their walls in there. So once that gets filled, all those orders get taken. It's going to drive the market up. So that's where you're looking at longs. It looks like it's heading towards that wall now, but just because it hits that wall doesn't mean that you're necessarily going to buy. That's when you're going to look at some confirmation. So then you go and we start to do our entry model where we're looking for some inversion of fair value gaps, some break of structure, rejections, so on and so forth, before we just jump into the long. But this is a good confirmation that price is weakening. It's getting to that area where the market, the dealers, the market makers have a lot of orders set in. So if it hits that area, it should generally bounce up from that area. Now on the way down, Depending on where they put those puts in, people may have been putting puts in from here this morning at the market open. Could have been put calls here, 29,500. We're going to put a put in for 29,500 in the next 2 days. So and the shorter time frame you have from current price to the predicted price, the shorter the time frame, the higher your profits will be. So we can see this rejection here. So being below gamma and getting closer to that put wall, what's happening is people that put in puts here for that 29,500, they're taking profits. They're taking profits, causing the market to go up. Taking profits, causing the market to go up. Taking profit, and people are also putting in more put calls. Oh, I think it's going to get to 29,560. It's expensive, 29,560, but the less expensive it'll be if, I think in the next 2 hours it's going to hit 29,560. It may not be as expensive because your time frame isn't as short. Now, if you say in the next week it's going to hit 29,550, I mean, yeah, your probability is higher. It's going to be more expensive. So people may be going right now in the options market for, okay, I know based on my analysis, price is at least going to fall to 29,580. I mean, this is real. It changes in real time. It updates in real time. These are tentative. They're not updated in real time. So this put wall is tentative. That's where it was at the moment, at this morning, but it could change, from time to time. But let's see where we are now. So our put wall was at 29,500. Let's see if we changed it. If it changed here. So to find that information, I go to flashalpha.com. Find that information. I don't have a plan. I'm just on the free because I'm cheap. So our put wall is still at 29,500 as of now. Last night when I looked at it, it was a different number. I just updated that number now. No doubt in real time that number's probably changed a little bit with people actively putting in their orders in the option market. So what we're seeing is people putting orders in is you're starting to slow up. They're taking profits, which is causing the market to react upwardly. People are buying them expensive put calls saying, okay, price is at 29,645. I believe it's going to go to 29,600 in the next hour. That's an expensive. Well, let me think. That wouldn't be as expensive, or because your time frame is shorter, so the probability of it hitting that within the next hour isn't as high as the probability of it hitting it in the next 2 days. You understand? But nevertheless, it doesn't have to hit it per se. It just has to get closer to it. And as it continues to fall and get closer to it, there are big profits there because there's such a short time frame. There's such a short time frame in between current price and predicted price. Just a few moves could have somebody going in big profits depending on how much they put in. So that's the options market. You can win big or lose big. If your analysis is pretty much on point and you could say, okay, so far on this session, we've got the 29,604. If they would have put that put in up here at 29,701 and say, listen, today I know we're going to hit 29,604, and they put 50,000 on it. I mean, those are big players. That's what they're doing, and they're hedging the market. And then they balance it out with these futures. They'll put their trades in on the futures. And you'll see futures, as it retraces, you'll see it, your stop loss will get hit and everything. Options, you don't have stop losses and all that. They're putting their trades in here, and it's going down. And as it gets closer, people are taking profits here. That's why you see it waking up. They're taking profits. It's going up, And once it finally hits that wall, say if the wall was here at 29,600, you would start to see the market reverse because there's so many orders being filled that it just caused the market to go higher. And that's when you start to look at confirmation. You start to look at order flow to see where the orders are coming in. And now people are reversing their positions, putting in calls. Okay, it hit our put wall. Now they're going to put in calls to say, okay, the market's going to hit 30,000 in the next day or two. So there's a lot of calls here. This is our call wall at 30,000. It's also a psychological area. So once we start to see some type of reversal confirmation, that's when we would start to aim for our higher objectives, our New York Open, our this daily fair value gap that was inversed, so on and so forth. But be as it may, we're here. This is sell side liquidity. We have a put wall here, which would create the market to at least give us a nice pullback due to the amount of orders that are filled. And this is a daily fair value gap. So based on our prior, just our basic model of what we have, our ICT strategy, if we tap into this daily fair value gap, we're looking at, I'm expecting price to go up anyway. So I have a low here on our sell side. That would sweep liquidity. It would tap into our put wall and a daily fair value gap. I'm looking for short. I'm looking for longs here. I'm looking for longs. In the intraday short, now that could be, this could happen in the PM session. This could happen Asia session. It could happen this morning. We're not sure, but not right now. We're into that new hourly candle. This is our new hourly candle. We're starting to see some rejection here. So now what I'm looking for, seeing that rejection, I'm going to go down to the lower time frames and start to see what type of inversions can we get. I like to see, before I get into longs, price invert this 5 minute. This is our first presented fair value gap here. If we get above that first presented fair value gap, we could at least see price go up here to these highs again. Right now it's kind of been, holding price down. You see it tapped into that 1 minute first presented fair value gap and bounced right back down. See if we got what type of, so this is a nice big wick here we got here. I want to mark this wick out here. I'm going to mark this wick out. This price has been, it's been holding this wick down for the last half hour at least. Let's see what the 1 hour. Yeah, so this is the 1 hour wick. It's kind of been holding price down as we get there. If we start, and I just mark it out because if we break above 50% of this wick and the price starts to hold. Matter of fact, let's do this. Let's do this. Just so we don't have a bunch of lines there. We'll put constant encroachment of that wick. So that's 50% of that wick area there that we're looking to break above and hold. We have a 15-minute fair value gap as well. We inverse that and start to hold that area, and we can start looking at higher prices there. But as of now, it's holding true to that below zero gamma, where you see a lot of instability. All these big wicks are coming below that zero gamma, whereas above you didn't see all that. It was more momentum to the downside. Maybe you'd see a little rejection after a break of structure or a tap into a PD array, but generally from the upside it was momentum to the downside. Here, this is what you see. You'll see it pop back up, and then now these big wicks to the upside. So a lot of instability there. If we could time it right, maybe get into some good scalp trades. So it looks like nice pullbacks and then continuation to the downside. So look, as it is now, we may sweep this area here, these session lows, get into this this higher time frame order block, see some more pullbacks to the upside and kind of go like that. Kind of pretty much do that until we get down into here. Maybe sweep these, pull it back, maybe even bounce off this wall. Then we start to see this. Let me start to see this. You know, it start to get higher. You know, so that's what we might see. There. So because it may now, we're up about $300 on our Lucid 50K account. Which if we didn't get into another trade, I'd be totally happy with that. We're walking away and getting into a better situation tomorrow or another time, another trading moment. But right now, price is so indecisive and unstable that a play in any direction, could, just set you up for failure. So, because even here, we got to break a structure here and then immediate pullback. We are starting to respect these lows here. Respecting these, so we'll see if we still respect these this bullish structure as it continues to the upside. Let's see what ES is doing here. So I'm gonna get those lines over there are not valid. There. You can see on the 1 minute it's starting to break down there. I just want to see what type of, if any, have we seen any SMT divergence here? So we're seeing NQ break these lows where ES hasn't. So if we start to see some break of structure to the upside here, that would be our SMT divergence, where we got to break from here. We got to break of a low. We broke these lows here. We broke that low there. Whereas on ES, this low is being respected, which would be our bullish SMT there. So we're kind of breaking down into that that PD array. This is an hourly PD array there.
Alex. Check out my new music video, 15 Late, on YouTube. Your one-stop shop for music.
And so we're tapping into this 1 hour bullish order block. So let's see if we get down below that area, sweep this liquidity into that daily fair value gap. Yeah, so shorts are definitely the continuation move to the downside. Shorts were definitely the way to go there on that one. We rejected off of that 1 minute first presented fair value gap. We're at these 10 o'clock here. So if we get into a if we get into a pullback, there's a 1 minute here. We kind of did pull back already and tap that 1 minute and reject it. And we see this drawing, this liquidity area here at the 53375 area. Let's see if we can get into there, and then we'll take our TP here, put our stop loss at those highs. Yeah, the RR on that is not great. Maybe if it would pull back to our 10 o'clock, that would be even better. But to take shorts now is kind of far down in the leg, kind of banking on the reversal to the upside, which we may not see on this session, so I wouldn't even put that in there. We could scalp a small short there. So yeah, that liquidity is also a weekly fair value gap. That would be and so I may jab a short there. Hey, let her go. Stop the whining. Sit right here. I asked you to stop the whining. Sit. All right, go upstairs. You have to stop whining and start using your words tonight. But it's okay. Just sit there and relax for a minute. Watch what we're doing here. So we pull back into this 1 minute FEG. I want to see if we pull back to our 10 o'clock. So let's see if we get up in here. We may not get tabbed in, but it would set up for a good. I'm going to put it right here. So let's see if it taps us in. Put a limit order there at this 10 o'clock area. Or 10 o'clock open, and this 1 minute FEG that we have here. It's trying to inverse this 1 minute here. We got a small. So if we can wick up and tap us in and then get us down, I think we're good. But we'll also put a stop order here, just in case we get below that area. If we get back down here, I'm confident that we're gonna hit. So it tapped us in on the sell stop to the downside. So I'm pretty confident that we'll get into that sell side liquidity area there. I'm gonna get rid of that there. So it may stop us where our other entry was, but I think I'm gonna do like I wanted to in the beginning, and we're gonna add to this winner, and I'm gonna put a sell limit there just in case price wants to tap me in. But I believe we're going to get lower. It wouldn't have filled us because this is where I had my stop limit in the beginning. It didn't fill us, but it did go down. You see how price is so indecisive. It's so unstable. But the momentum is still to the downside. But the instability comes in, not being that it won't deliver, but it's whipsawing around. That's where the instability comes in instead of a straight push to the downside. Put our stop loss here. Right there. Lined up with that. See if it tapped us in. It kind of supposed to tap us in, but so it tapped us in and added to this, which increased our position here. So it tapped us in, and we're getting down in there, and I believe we may deliver down to that sell side liquidity area there. So it tapped us in on our original. I wanted to see that 10 o'clock open area where it drew to that area, rejected. It was also a 1 minute bearish fair value gap it rejected from. So now we're going lower. This is a 1 minute here. I'd like to see an inversion of this 1 minute bullish fair value gap. And if you haven't entered there, and enter below here off of this body closure would be a good area to enter as well. So we'll see here. I did not take another trade on my Lucid account. I just don't want to sit through that type of volatility on any of my funded accounts. We took a small scalp trade long to the top after we swept those 8 a.m. lows and inversed our 1 minute, and we took our long, and then we cut it, you know, at the middle before it reached our highs, our 8 a.m. highs. We kind of cut it here before it reached our highs. We're still below that gamma flip, or that gamma zero, which indicates instability. Still going on momentum to the downside, but as you can see, it's momentum to the down. Then we're going up, pushing up, and these are significant. These aren't little small pullbacks. Significant pullbacks. These are taking out people's stop losses, and that's what it's doing. It's taking out stop losses. It's causing traders that are in shorts to kill their trades. It's like it just took our stop loss there. And that's why I'm not entering in on any of my funded accounts right now. I'm not going to do that. I'm happy with my $300 on the day. We're gonna stick with that. Our next highest probability trade would most likely be after we hit this sell side liquidity, because no doubt it most likely will hit this liquidity, and then we tap into that daily fair value gap as we get closer to this put wall, then start to look for reversals to the upside, and that may be this PM session. Who knows? Right now it looks like it's trying to trap some buyers in right now. They're trying to call the bottom. We tapped into this hourly bullish order block, so we hit exact around the 50% mark of that, and then it bounced up. We have a failure swing here on the 1 hour, but we also have this top wick as well on the 1 hour. So that's a nice failure swing there on the 1 hour. We got about a half an hour left into that new candle, but this is a doji. This is a heck of an indecisive doji. We got a bottom wick here, small body here where the majority of the action is taking place, but we also have a top wick here. So it's chopping around. It's very indecisive, remaining true to that gamma zero environment that we're in. So it's below gamma zero, which is the telltale sign of these wicks. The wicks tell the story. See all these top wicks? That means it's been whipsawed. It was there at one point, but it's not anymore. Kind of like the tail smoke from an airplane. and it flew right back down. Here you don't see those top wicks. This is above that gamma 0. It's more stable when it's above there. So that's what we're seeing. We're seeing people come down here. It's getting close to that put wall, getting close to those predictions. People are like, that's enough for me. I'm going to take profit. And they're cashing in. And it's pulling and it's pushing up. They're like, oh, it's getting close to that put wall. Let me put in some put. And then people are on the options market putting them in. And it's driving the market back down. And then they're cutting profits, pulling it back up. You know, in the futures market, people are going short, and it's getting them wicked out, and it's going them back down. So it's moving the market. That's what's moving the market. It's not just what you see on these charts, and that's why I put these levels on my chart. You have your call wall and your put wall and your gamma flip area, so I know what type of environment we're in. We're in a very indecisive environment. So as I refine my strategy and start to execute our plans, we may put into that rule book, hey, when we're below gamma 0, depending on how close this put wall is and what type of liquidity we have down here, we may not be getting into a whole bunch of trades that we normally get into. So a sweep of this 8 a.m. low, a tap into a higher time frame PD array on this 1 hour, yeah, that definitely would call for our longs, and we wouldn't be wrong. But we're going to put on half risk, and we're not looking at going on full TP. Because here, when we bounce up, that's a nice long there. Just measuring that area from there to there, that's 100 points. That's 100, just back to the 8 a.m. lows from that area where we had that 1 hour failure swing, that wick. This is that wick right here. That's a 100-point wick. That's a good long. So we could be still entering into our trades, but I'm not going to aim for 8 a.m. highs. I'm not aiming for New York Open because we're below that gamma. So, you know, pullbacks are imminent. So that just gives me more clarity on my trade, and I'm not going to be one of those traders that I'm going to put it in, got my stop loss here, take profit up here at the highs, because I know since we broke 8 a.m. lows, we're going to hit 8 a.m. highs, and I'm either take profit or stop loss. No. If I get in and we're up 50 points, I'm pulling my stop loss into profit, and if it comes back down and wicks me out, it wicks me out. But to be able to put my take profit back at those 8 a.m. lows, that's valid information there for me. That's good information. That's good information. I'm not looking to break structure. I'm not looking for these highs. I'm looking to get back to these lows. That's 100 points. Why would I be looking to break these highs if I got 100 points? I don't care if it breaks the highs or not. But if we get back up in here, and I know I've hit a higher time frame bullish order block, and we're reversing on the 1 hour chart, I have a failure swing here, meaning it failed to get down there, and I got this bottom wick. I'm going to the lower time frames, and I'm looking to see where we at, what's going on. And here on the 5 minute, let's just take this leg here. If we take that leg there and look, okay, I'm in discount. We broke these lows. I've hit it. So now I'm looking for longs. I'm looking for longs simply back up to this 50% mark. I'm not looking for longs to get back up here. Now, once we hit here, we're in this OTE area. We're in this golden area. You see how it's starting to reject? That's why this is darker. This is that golden zone here. This is where we're looking for it to bounce back down. So if we get here and it bounces back down, I'm gonna refine it even more, and we're gonna go here, and I'm looking for shorts to here. So I'm not looking for shorts all the way down. I'm only going to look for shorts to here. So once we get here, I'm going to look for shorts to here, and then it possibly will go back up. But from there to there, that's almost 40 points. I'm good with that. It's a scalp. So that's how we're going to start refining these areas. But as we get in, so now we're at that golden mark there. So we're going to look. So I'll just keep that there just to see how accurate that might be. See if we get in there. So as we get into here, so I get here, boom, we got a figure swing here. Go up to that high there. I want to look at my so I want to see it get to here. If it gets into this 50% area, we come down here, we get to this 50% area, and I'm looking for longs. I'm looking for it to long back up. So we have a 5-minute order block here. So if we push down into here and we get down into there, get that pull back, I want to see it start to push up. So let's get here. Let's look at ES. What's ES doing? So ES broke that low there. But by far NQ is the weaker of the two. So we'd be looking for ES to start to push up and start to break structure. Once ES starts to break structure, then I'd be looking at some longs. I'd be looking at longs on NQ. So I'll get rid of that there. You get there. Let's open our screen here. Let's go over to the 1 minute. Let's get rid of some of these drawings, because it's getting kind of crowded over here. Getting kind of crowded. I'm going to close out some of these ones here. So we're back up at those 80 highs. It's starting to consolidate here, so I like it. I like to see the consolidation, because when we start to see that consolidation, then what do we get? We'll get a sweep somewhere, a liquidity sweep. So I'm looking for some liquidity to be swept. I'm looking for some liquidity to be swept down into here. And then a push to the upside. So we swept that area of liquidity here. We swept that blue line. And now we're pushing up to the upside. Well, we see that those bottom wicks and those top wicks, a lot of indecision there. So after we swept that liquidity, if we get a break here, then what I want to see, this is our first presented fair value. I want to see price break back above that. I want to see price break back above that 1 minute with a nice body closure, and then we'd start shooting up towards those highs. We're at it's 10:36 now, so looking into getting into that 1050 macro. What did I ask you? Okay, well we can't scratch. Have a seat there. and then we'll get your cream. Go get your magic cream. And don't scratch. I told you. Go get your magic cream. It's my granddaughter there. She has a little itch on her arm. You know, they tend to scratch it, but then it makes it worse. So I'm trying to get her. Go get your magic cream and we'll make it better. So we see price, see how it's moving around. Is there news? What's making it act like that? Let's see. Okay, major Iran tensions escalate. Oil prices have surged to their highest level since July. Strait of Hormuz amid highly volatile. I don't know if any are live. Well, yeah, so that's the current news that we have now. Oil prices are rising. So that's causing some indecision. They're probably trying to figure out, does this have anything to do with the tech industry? Trump says U.S. not seeking MOU extension with Iran as Brent crude oil tops $90 per barrel. I know that's not good for gas prices, but I know oil's been a little bit more expensive than that in the past. Is that enough to push the market down? Seems so. Seems that it's at least enough for a pullback. All right, so we may be pulling back and see if we can pull back and sweep that liquidity that we plotted out. All right, come here. Let me see. All right, so what did I ask you? I said don't scratch, right? Because it makes it worse, right? All right, so let's not scratch. It just makes it worse. All right, so let's just keep it there. But you gotta let it dry so it can heal. But let's not scratch. All right, so they're good with that. So hold on to that. I'm almost finished. You want to sit there with me for a little bit? And I'm almost finished. Because we'll probably close out here for the days. It looks like price is just going to kind of whipsaw around for a little bit. But like I said, I'd like to see some clarity in the market. I'd like to see it pull back, sweep that liquidity, and well, we may see a further pullback down into here, and this is that sell side liquidity and that daily fair value gap here. However, if it does hold above this area, so generally I like to, let's see what we got here. 15, boom. We'll take it from this high to here. We're currently in discount. You see we got into that golden zone area, that OTE area on the 15, kind of wicked it and came back down, wicked it, came back down, wicked it, came back down. So we may be looking at some more continuation to the downside, momentum to the downside, along with that instability, which remains true to the nature of that below gamma zero environment that we're in. So far we've been continuing to break to the downside, lower and lower. which is uncharacteristic without, and I believe this news has a lot to do with it, because other than that, we have our New York Midnight Open, we have our daily opening gap up here, and we have our new week opening gap. We have Asia highs, and we have prior day highs and weekly highs up there. There's a lot of targets to the upside. The only thing causing this momentum to the downside is our current political environment that we're in, with this war and oil prices skyrocketing, and our movers and shakers just losing confidence in the market and pulling their money out and probably putting it somewhere like gold. I haven't checked the prices on gold yet, but let's see. I haven't checked gold in a while. We're up at 4,446, which is pretty good. Still up there. It looks like it's down $26 today, which is nothing. But I would think it would be up because of the news, but seems like all the precious metals are a little bit down. Where's everybody putting their money? If they're not putting it in, they're taking it out, not putting it in gold. Where are they putting it? I don't know. Where they putting their money? Where would you put your money?
In my purse.
In your purse? That might be the best place to put it. In your purse, not the market. I tell you that much. I tell you, you want to know the truth, you just ask the kids, man. I said they're not putting their money in gold. I don't see nobody putting their money in silver, because everything's down for the day. Oil prices are plummeting. They're pulling their money out of tech. Where are they putting their money? Where would you put your money? In my purse. That's the answer. So, if you want to know where to put your money, put it in your purse. At least you know where to find it. At least you'll have whatever you put in there, it'll be the same when you pull it back out. So we're starting to see a pullback down into that into this order block here. This is a 1 minute bullish fair value gap that we're looking to see. That price has been holding up during this session. If we inverse this, that'll be indication that we could be seeing some lower prices down into this sell side liquidity closer to this put wall, which is into a daily inefficiency. We have a daily and a weekly inefficiency here. So
apple is my favorite. That banana is not my favorite.
Let's put it there so we can see it on the 1 minute. Okay, so that's our daily inefficiency there. So if we sweep this area, we'd be tapping right into that daily inefficiency, where a lot of investors have predicted that price will fall to. Well, I predict that the NASDAQ will fall to. But it's kind of funny, because as price gets closer to that put wall, and which makes this options market there's like self-checked imbalances there, because as it gets closer, greed starts to step in, and instead of letting it fall down to that area, which they would maximize their profits, if they put their puts in here, if they put those orders in up here, or the farther up they put those put calls in, the closer it gets to that put wall, the more their profits grow, even though they haven't fully hit it. It's kind of like this is your TP, but you haven't hit it yet. But as it continues down to the TP, you can cash out at any time. And that's what happened in the put market. But you got these big institutional orders that I'm talking about, hundreds of millions of dollars, being put on these option plays, and as it just falls down, just a little, the closer it gets, I mean, you could be talking about millions and millions of dollars in profit. They take their profits. They're not going to wait for it to hit all the way down. And as they take those big orders, or even just some of those profits, it's pushing the market up. And especially after it hits below this area here, this is where the gamma zero area is. So a lot of plays, when they put those option plays in, they'll put it at zero, whatever it may be. There is no stop loss or anything like that, but it's more of a time strain. So if it doesn't hit this area before the allotted time that you stated it would hit in, you're out. But within that time strain, so say like within this hour, and you say it's going to hit this area by tomorrow. If it doesn't hit this area by tomorrow, you're done. But anytime between now and tomorrow, you can pull your trade out and realize whatever gains that you have. But as they start to pull these trades out, they get, they see the market pulling back. I'm getting out, and they're pulling it out, and it causes the market to bounce up. People are putting trades in, saying, "Oh, we're well below here. I think we'll hit it," and it's causing the market to go back down. So you got people taking profits and entering trades, taking profits, entering trades, taking profits, entering trades, causing the market to look exactly that way. Putting in trades, taking profits, putting in trades, taking profits, putting in trades. They take a profit, drives the market up. People putting in trades, pushes it down. Oh, take my profits, push it back up. Put a trade, push it back down. So that's what the market looks like. Just, But before I came across the gamma situation, knowing what type of environment we're in, we just call it barcode. It's just barcode. And it's just, why is the market doing this? What is going on? I don't want to ask those questions. I see, professional streamers. I mean, as what they're called. They're on there, and I mean, they're making a lot of money. I don't know if they're making it because of affiliates. They're taking trades live. There's a few on there I see taking live trades that aren't doing so well, but they just have multiple accounts to blow because they have a lot of followers. So they're getting a lot of affiliate money. So those prop firms are just giving them accounts. They can blow accounts all day long. And granted, sometimes they make some money, but when the majority of the times I see them being more entertaining than professional. But the main thing I wanted to say is I hear them asking these questions. What is going on? Why is the market doing this? I don't know, chat. I don't know. Who knows? If you're a professional, I don't think you should be asking those questions. I think you should be answering those questions. So in an attempt to find the answer to those questions that I'm hearing these professional streamers, these professional traders, these $1 million a day traders, $1 million a week traders ask the chat is, I want to provide the answer to those. I don't want to be sitting here asking like, why is the market doing it? What is it? So now we know why the market's doing. We know what environment we're in. It's barcoding. It's acting as it should because of the options market versus the futures market, what the movers and shakers are doing, what the market makers are doing, and why they're doing it. And I don't know all the answers, but as we continue, I'll continue in an attempt to find the answers. So to answer that question that the streamers are asking today is, so the question being, why is the market doing it? What's going on with the market? Well, look at that 1 minute chart. What's happening? What's going on in the hourly chart? Well, if you're listening, with your 1.7K followers watching or 3.9K followers watching or whatever, if any one of you guys hear this, you can pass it on. acting that way. The market's acting that way because of the environment that we're in, due to the correlation of options market versus the futures market. We're currently in a negative gamma, below gamma zero, which, and I'm going to go right there to the source because I'm not going to pretend I know this off the top of my head. I'm just applying this as we learn it. Below gamma zero, the environment can become more momentum driven, unstable. So momentum being momentum to the downside, but as we see here, as it hit below gamma zero, we start to see that instability, those wicks, those high top wicks being formed. Whereas when we were above this line here, above gamma zero, we seen that more supportive move to the downside. Not so many pushes back up, then down, up, down, up, down. People, investors put their orders in, their puts in, and it's flowing. They're letting it go. They're letting the market play. But as it gets past a certain point, gamma zero gets closer to that mark. What happens? Just this normal activity. What's going to happen? We hit a major area. This gamma zero, we hit some liquidity area. This is a 1 hour chart. This is a major area of liquidity here. It crossed that area up. We're going to take profits. What that does, push the market up. It's going to continue down. Take profits, push the market up. Continue down, push the market up. So that's why. And that's what's going on. Now we can see it going down. And hopefully, I think we may see it hit that area. But we're in that 1050 macro. We may see that delivery to the downside. We just swept. We swept a small interior area of liquidity there. So we got 5 minutes left on this 1 hour. So we've inversed that 1 minute fair value gap here. We got a little pushback up and down. Let's see if it comes back up to retest this area here, or it may just continue straight down. So let's see. Take a look on the 5 minute. I'm kind of waiting for a pullback. This is a pretty expansive candle down on the 5 minute. I want to take a jab to our sell side liquidity. So we are pretty far down off these. I'd like to see it pull back up to our moving average and then a bounce off. Don't want to jump right into a short. So it kind of lines up with that 8 moving average. If we pull back into that blue line there, that'd be a good short there. Let's see if it goes without us or if it pulls back. It looks like we're going to push down and maybe deliver down to the downside there to hit that area of liquidity. I kind of want to tap it in on my Lucid account, hit that short scalp to that 533 area. But in the past, it's kind of bit me. But it's tempting. But I think I'm just going to hold off, let it do what it does, come back, and we're going to keep this account where we are. We got about $700 until we get to our profit target. I'm just going to hold off and be patient. It was a lot of work getting to that point just because I've been trading this account as I would a live account. I want to get to the funded portion of this account and then, professionally take these trades to practice good habits, create good habits. And it's about the long term. On the short term, I want to pass this account. I want to catch these moves. In the long term, are these quick short moves with no real confirmation from or outside of my entry model healthy? I don't believe so, but I do believe we're going to hit this area of liquidity. Now, a move I would take is if we pull back into this area and came down. I wanted to take this short here from here to here. Respectively speaking, you could have made a couple bucks, but professionally speaking, my stop loss would have been up here, my take profit here, which doesn't make sense. So we're talking here to here with a stop loss up here. But if even I put my stop loss there, why would I put it there? It's not protected by anything. Price could definitely go back up in there. So I'd rather, if price has the ability to go back there, I'd rather put my entry where my stop loss would be. If it doesn't, it doesn't. And that's what I'm practicing there. See how we left that open? We've left this open here. But I'm banking on price sweeping this area of liquidity, tapping into this daily fair value gap, and possibly bouncing off this put wall and maintain above it. And you see how it's going down. So we hit that area and look for higher prices to the upside. So we'll get rid of that. So, in a day like today, the market's flushing because of the news. It's reacting, and I don't want to be a part of that. I want to do the opposite of what everyone else is doing. We're not scratching. I told you. See? All you have to do is tell me. I'll probably say, where's it itching? See, when you scratch, it's just going to make it sore. It's going to make it hurt. So you got to listen, all right? All right, go ahead. Don't scratch. We want to make it better. We'll put our magic bunny on there too to make it better. Here. So hold that. And when it itches, put your magic bunny on there. You're going to put the bunny head, hold it. And where it itches at, just rub the bunny head on it, alright? Make sure you put the bunny nose and let the bunny do it, alright? Don't scratch it with your fingers. Rub it with the bunny, alright? There we go. Don't lose it. So when it itches, put your bunny on it and it'll make it better. You alright? We're almost done. We're going to close it short here. We're approaching our 11 o'clock hour. That's usually quitting time, on or at least a pause in our trading. Get some lunch, regroup. Yeah, so when the market is selling off because of news, you kind of just want to let it do its thing. I know it's tempting to want to get in on this, but you just kind of let it do its thing. That's the safer move. Not to say you can't take some shorts in there. There's definitely here room to take shorts. Definitely some strategy that we could and plans that we could have put in place to execute some shorts. But I'm looking for overall higher probability moves, and that's what trading's about. You don't know at any given point in time exactly what the market's going to do, but it's kind of like in life. You can't predict what's going to happen in life. There is no magic crystal ball, but you do have probability, and that's what you have. You have your sidekicks and your people, your fortune tell. If they really understand nature, if they really understand how the universe works, there's multiple different variations of what could happen at any given time. We have free will. We have choice, which creates that era of probability. Other than that, it would just be like, okay, it was written, it's going to happen. No, there's a overall basis of a trajectory of your life of which way it's going, but how you get there is multiple. It's like a film strip, with each slide. So it depends. If I decide to get out of this chair and jump over the desk, that's one way. I decide to get out of this chair and walk around it, that's another way. I could walk around it, that's another way. I could go under it, that's another way. Either way, I'm trying to get to the other side. But there's multiple different areas. What's the highest probability path of me taking to get to the other side? Well, he's right-handed, so he'll probably exit to the right because that's his strong side. He's 45, so he probably is not going to jump over it or go under it. So he might, higher probability, he may walk around it. Is it a higher probability he may put his left hand there for support? Maybe. He may not. But there's just getting up and getting to the other side. There's 100 million variations of me doing it. I could lead with my right foot. I could lead with my left foot. I could put my left arm back and my right arm back for different but what's the highest probability? And that's what we do in trade. The highest probability trades we take, and that's not gambling. That's preparation. That's analysis and sheer experience, and taking that all into consideration. So we see news. It's pushing down. Okay. Once investors calm down and they see that there's nothing to fear, and we start to hit those areas that were called out as being this put wall, we get closer. They start to take profit as we get closer to this area. Start to take profit, and they may let it go down. They may see, okay, the oil prices, the news on the oil is causing the market to go down. So maybe that was all, in the cards all along to push it down to get to this area so that, those big players could get that big payout. So if they're creating this fear and allowing the market to push down, they know that the market's going to get there eventually. All this pullback and all this stuff may be scaring people, but they know, and their money's long enough to withstand some drawdown. being the pullback. But ultimately, those moving shakers know, okay, it's going to get to this area. If not, hey, let me call and we'll put something out there and make these guys get a little scared to pull their money out. And that's what's happening. They push it down to get to this area, and ultimately this is where they want to get to. For me, as I don't have those type, I can't make a phone call and tell them to, put something on ESBNCDA news or whatever and say, hey, oil, we're gonna do this, and it's gonna make us hard to get some oil, and it causes the oil prices to go up, and then people get scared, pull their money out, and therefore pushing the market down and causing it to do what they wanted to do. They can make those moves to make that happen. It's higher at the end, even them doing that. It's possible it could not get there, but it's a higher probability that if they use their powers and pull those strings, it's going to get to where they're going. So for me, the higher probability is to let it do that, and once it get there, to see the market react from that area. Now that they're fulfilled, their goals are fulfilled, their scenario played out. Now I can let my scenario play out, which is the higher probability being it's going to continue in a normal fashion and start to break structure, and it's a higher probability that's going to, since it's finished its move and completed its objective to the downside, that it's going to go to the upside. So for me, the higher probability is to wait for price to show me some sort of rejection to the downside, having swept this area of liquidity, having tapped into this daily fair value gap, and show me some bullish indication that we're going to the upside. It start to hold, and then we start to aim at those higher priced objectives. So that's for me. Be as it may, getting down here, sweeping liquidity, these could be early buyers here. Prices coming back down to sweep those guys. I don't know where the objective is for these, anywhere between here and this put wall, or even below it. But the highest probability for me is to not get in now, because those early buyers here that seen us tap into this daily fair value gap, they're going to get swept. Then again, they may not, but it's a higher probability that that liquidity gets swept, which is good, causing the market to fill orders and go higher. So, but for me, if it does sweep, I still want to wait for some break of structure to the upside. So that's how that works. 15-minute candles looking bearish with that top wick. Got about 5 minutes left, so we may continue down to that 29,500, which is also a psychological area. Be careful. You hit your toe? It's all right. Be careful. I know that hurts. When you jam your toe on a chair, it hurts. You're right. I know that hurts. You gotta be careful. No. Oh, all right, guys. So we got diapers and babies tapping their foot, so we gotta close out. But so I'll check back in on the PM session. I may not stream, but I will be watching price as we hit this area to see how the market reacts. We're into this daily inefficiency, and there's a weekly inefficiency there as well. So once we go down here and we start to see some break of structure to the upside, then we'll start to make some decisions to get into some trades here. This could be a good area, a reversal area, to get into some longs if we can get into a good position. So to watch this position will be good. So what I'm going to do here is I'm gonna set up some.
I'll be right back by the plane.
I'm gonna set us up some notifications here. So if we break this, if price gets here, I want to get notified. So I'm gonna put a notification there. Crossing up there. I want to know if what price is going to do there. This is a 1 minute bearish FEG here. There's a 5 minute here. So again, if we inverse this 5 minute, I want to know, I want to be notified here. All right. So we marked that out there. So if we break this 1 minute FEG here, we inverse this 1 minute, and we break these highs, I want to be notified. I want to know what's happening. If we inverse, we get above this, there's a 5 minute FEG here, I want to be notified. With the idea of possibly getting into a nice reversal trade at a good time, at a good location. So I want to see some structure to the upside there. And then we'll go from there. So let's just see where we go from here. It looks like we've hit most of our objectives to the downside and starting to push on some bullish activity. So let's go. But with that being said, I'm going to go ahead and close this stream out because I could be here all day because I just, I love what we do here. But I got some other things we have to do. I got a diaper needs to be changed. Yep. That's the trade daddy. That's the trade daddy. What do they call it? Mission statement. Trade but change diapers when they're needed. So that's what I'm doing. So thanks again for checking me out. Hit that like and subscribe. I felt like we learned some good things today. We're making some good moves. We're progressing in the positive direction. So happy trading, play it safe, and I will see you tomorrow.